Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, January 8th, 2015. Today folks, the markets have been able to maintain the rally that started 2 days ago. If we take a look at the situation here on the S&P 500 though, the rally could continue and heads towards that top of 2014 on the S&P 500. Simply by also looking at the stochastics here, we see that the buyer's momentum is still there on the S&P 500. So today on the show, what I'm going to do, I'm going to focus on the sectors that actually led the rally and what could actually allow this rally to continue. Tomorrow we have the employment report on the US. If it's positive, we might see the rally continues and for the markets to head towards the top of 2014. One thing also that could explain why the rally has happened for the last few days is the more dovish tone, I would say, that the Fed has adopted in the minutes of yesterday. So the low interest rate environment is giving investors some kind of optimism, I would say, and they're continuing to actually buy the markets. So let's focus on some sectors that actually led the rally today. On marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below. We did actually publish those sectors movement, and I'm going to show you a sneak peek of the stocks that actually stood out. If you want the full list, you can make a free trial of marketgurus.tv to be able to have access to that list. So if we take a look at the sectors that stood out, first of all, the utility sector. Actually, it's a clear bullish cycle in the sector. You could trade it either with an ETF, which is XLU, that allows you to trade the utility sector on the US, but there are also several breakouts in the sector. Actually, XL Energy on marketgurus.tv, we did recommend that stock as an analyst choice on marketgurus.tv. It's our favorite on this sector simply because when we take a look at the market situation, let's give us some scenario. If the rally continues on the market though, market could head, S&P 500 could head towards the top of 2014. However, this top of 2014 could be hard to break. We might actually either have a pause or a correction again on the S&P 500. And on a stock like XL Energy, in terms of loss potential, is not that great because it's only increasing by 1.13%. Where would the exit point be if ever we have the reversal of this upward trend? So the trend is our friend there, and below 35 bucks, we're going to close out positions on XL Energy. So this is actually the favorite that we find on the utility sector. Wisconsin Energy is also a stock that stood out, that is breaking out today as well. Wisconsin Energy, WC. You also have INTEGRYS Energy. It's breaking out, but you see it's slightly losing some upward momentum. And what are the stocks that should be watched for an eventual breakout if the rally continues? Dominion Resources, higher than 77.91 on the break of that sideways formation would be a buy. Exit point 75. On INTEGRYS, the exit point is at 76.43. On AQUA America, it's still neutral though, but look, if it does break 27 bucks, it would also break that former resistance of November and December, and that will be a clear buy on a stock like AQUA America. We also had some movement in the maritime and transportation sector, but most stocks on the sector are still good for day trading because the movement already started a couple of days ago. For instance, on a stock like TK Tanker, the breakout was recommended on marketgurus.tv on January 2nd. Today, it's mostly a profit-taking opportunity for those of you who bought that stock on January 2nd when the stock broke out of sideways formation. For day trading, it was really active though. You had an entry point here. The other entry point is going to be around 6.14, but you could have also got in whenever the stock reversed that downward corridor around here, or slightly this one here on TK Tanker. So that was actually a stock that remained really active for day trading. We also have some stocks that broke out for swing trading, such as KNIGHTSBRIDGE Maritime. However, maritime stocks, though, the thing you have to take into account is that a lot of them are already surging by more than 5%. I've shown you earlier the situation on the market where the 2014 top is not so far away. So if you're getting in on a stock like KNIGHTSBRIDGE Maritime, you have to be willing to either accept a bigger risk, a bigger loss potential, because the break of that support is at 350, which make the loss potential more than 10%. Or what you could do, you could say to yourself, you know what, I'm going to get into a stock like that, and if ever it loses all today's gains, so below 370, I'm going to get out on that positions. Same thing too for KNIGHTSBRIDGE Tankers. Actually, that stock has been really, really active for day trading. One entry point here, one there, and one there. So almost 4 entry points on a stock like KNIGHTSBRIDGE Tankers. Can it continue to rally? I find that at 32% increase, it's becoming a little bit too late, too far away for a stock like KNIGHTSBRIDGE Tankers. However, for day trading, yes, if ever the rally continues. KNIGHTSBRIDGE Maritime is also a breakout. Make sure you put your exit point at $4, but it's already increasing by 10.94%. So either you're going to tolerate below $4, or you're going to say if ever we lose all today's gains, you're going to close that positions on Navios Maritime. What are the stocks that should be watched in the maritime sector for an eventual breakouts? There's CPLP on NASDAQ, higher than 820. Ship Finance, higher than $15. And Diana Shipping, higher than $7, will reverse this downward trend. So this is the list though. The stocks you see that is highlighted with an S in the utility sector is our analyst choice on marketgurus.tv that you can have access for free for 10 days. So it's Excel Energy. And all the stocks highlighted with an I in the utility sector are stocks that could break out. And on the maritime and transportation sector, all those stocks you see that are highlighted with an I are stocks that could break out as well if the rally continues. I think you should continue to remain picky in the type of stocks that you choose, because even if we have a more dovish tone from the Fed, and even if the employment report that will be released tomorrow is positive though, the technical pattern shows that the SPY still has the top of 2014 around here. So this is the point where we might either have a pause or maybe a correction on the SPY. So this is why you should not be buying everything, but only the cream of the crop. So this was Christian Charlo for MarketGurus.tv. You can always follow us on Facebook, on Twitter to chat with us. And never forget, folks, the more money you make, the happier we are. See you next week.